Welcome back. And in our business news, property transactions in Dubai hit over 83 billion dirhams in the first 9 months of the year, according to officials. According to a local paper, His Excellency Sultan Bati bin Mejrin, the Director General of the Dubai Land Department, revealed that the Emirate saw 27,452 transactions at a rate of 150 daily deals and 20 per hour. These included sales, mortgages, ijara, deferred sales, among others, with sales dominating the transactions at a value of over 43 billion dirhams, covering 52%. The Director General added that Dubai's property sector has shown increased flexibility in dealing with investors for the period. He stated that Wadi Al Safa 5 was the most traded area in terms of the number of land transactions, with 403 deals, while the Burj Khalifa topped the list of most traded areas in terms of units, with 3,305 sales transactions. With the second and third generations starting to get active in family businesses, the challenges of governance structure, succession planning, and the growing number of family members are just a few of the many challenges faced by family business owners. RSM Daman, a leading accounting and auditing firm based in the UAE, held workshops in Dubai today in order to educate family business owners on managing the family enterprise. Family-owned businesses form the majority of businesses in the region and the UAE, and experts say that there is a need for a multidisciplinary approach, with family businesses expected to become increasingly complex over time, as the self-interests of different stakeholders diverge. They added that governance systems, planning and transparent communication are essential tools for any family business looking to endure beyond the first generation.
Probably the most important thing they need is clarity, clear communication about the expectations of what their roles and responsibilities will be in the family business. Very much part of that will be preparing them for those roles. And at some point during the evolution of the family business, there will be what we call a liquidity event. So either part of the business will be sold or one of the operations will be sold. And it's very important that the family is prepared for that liquidity event. And that often means looking at other areas of financial investment, asset allocation, wealth structuring. So I would say it's a very broad base of needs that they will have, but in each case it's planning is the key feature to make sure they're ready for that liquidity event when it happens.
This region may have some inherent advantages in the sense that families here are a lot more close-knit than, say, families maybe in the West or other places. Secondly, being a financially stable region, what we are noticing also is that a lot of family businesses tend to send their second generations abroad to the best schools, the best business schools for grooming them for the future. So given all of those advantages, I think this region has a unique advantage when it comes to family businesses. But not to forget, families in this region are also quite complex.
His Excellency Obaid Humaid Al Tayeb, the Minister of State for Financial Affairs, received the Finance Minister of the Year Middle East and North Africa for 2012 by Emerging Markets magazine. He received the award on the sidelines of the annual meetings of the International Monetary Fund and World Bank Group that were held in Tokyo, Japan during October. And Emirates NBD today announced its results for the 9 months ending the 30th of September 2012, reporting a net profit of 640 million dirhams for the third quarter. Commenting on the group's performance, Emirates NBD's Chief Executive Officer, Mr. Rick Pudner, said that the strong set of financial results demonstrates the bank's ability to take advantage of gradually improving economic conditions and to deliver on a clear strategic course.
I'm pleased that the bank has delivered a stable set of financial results for the third quarter 2012, with net profits for the quarter of AED 640 million, broadly stable compared to both the first quarter and second quarters. This stability and profitability was primarily achieved by continuing to actively manage the various operating levers we have at our disposal. For example, while we have faced loan spread compression during the previous quarter, we have reversed this trend in the current quarter through active ALM management, In addition, we have sustained our focus on cost optimization, with the level of operating costs in the third quarter now being 150 million dirhams below the cost base in Q4 of 2011. Emirates NBD is resilient and well placed to take advantage of the growth opportunities in selected areas. Capitalization, as you've heard, and liquidity continue to be extremely strong, offering us resilience and flexibility for the future. We have significantly de-risked and continue to strengthen our balance sheet, and this offers us a strong platform for capturing future growth opportunities. The bank has a clear strategy in place and is focused on relentless execution of this strategy.
And Nikhil also announced that their profits nearly doubled to 1.1 billion dirhams in the first 9 months of the year, off the back of new sales and retail and leasing activities, while revenues grew by 126% to 4.5 million dirhams. So with that, let's now take a look at the stock indices across the GCC. And looking to other business news, with a shadow cast on risk sentiment following last week's anemic growth figures from China, optimism was kept in check as investors turned to the week ahead to get a more accurate view of how global growth is panning out. Well, we earlier spoke with Gaurav Kashyap, the head of the DGCX desk at Al Pari Middle East, about the forecast for the week ahead.
Much of the data flow from last week's economic calendar was revolving around the global growth story. On one side, we had the US announcing some pretty positive and improving growth data. For example, we saw the industrial production and manufacturing production figures increasing across the board. We had advanced retail sales also trumping expectations. So this brought a bit of risk sentiment back into the markets. But unfortunately, data flow from China last week showed some downbeat growth forecasts. We had third quarter Chinese GDP coming in at 7.4%, this well below a previous reading of 7.6%. Overall, the focus in this week's trading will also be on the global growth story. The US is expected to announce their third quarter GDP reading on Friday. It's expected to come in at a positive 1.8%, this well above the previous reading of 1.3% when the Commerce Department downgraded it from 1.7%. Across the Eurozone, we have a slew of PMI data for manufacturing. Germany expected to show moderate growth, but still below 50 levels, which is once again contractionary levels. The Eurozone PMI also expected to fall below that 50 level, but also expected to show some moderate growth. On Tuesday, we have the HSBC flash PMI data for manufacturing for China. We'll watch how that comes. If it comes above 47.9, that could be slightly positive for risk sentiment. But overall, we're going to keep an eye out for the equity markets. We have a strong couple of companies this week announcing their earnings. So once again, any type of positive earnings will have a positive impact on US equity markets, which will see risk appetite coming back into the markets.